The Buffett indicator has surged to another all-time high. Should you be worried? Well, the Oracle of Omaha actually speaks and gives some insight, an update on what's so-called the Buffett indicator. I got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. The stock market is just continuing to march and hitting all-time highs, all-time highs, all-time highs. And so is what Warren Buffett called the most important measure of the stock market valuation of all the different indicators out there. He says this is the most important one of determining whether the stock market is overvalued or not. And therefore, it's been dubbed the Buffett indicator. And it's basically a ratio of the total stock market cap, okay, the total market cap of the stock market, the S&P 500, okay, divided by the GDP. The annual economic output of our economy, all right? And so this was back in the tech crisis. And listen, before I even explain this, I mean, you first need to understand that Warren Buffett is a value investor. He likes looking for his entire philosophy. This guy probably I wouldn't even say probably. He's the most successful individual investor during this generation, and he's in his 90s now. So that's saying something going back, several decades. But he's made his billions of dollars looking for cheap companies, investing in them, and then watching their value appreciate. Okay, so he's a value investor. And so he's looked and said, listen, back in 2000, when the overall stock market as a market cap becomes too high of a percentage, too high of a ratio compared to the overall economy, GDP, that's a warning sign. Stocks are expensive, okay? They've reached another all-time high. Guys, we are now over 200% in the Buffett indicator. That means the overall market cap of the stock market divided by GDP is over 200%, 2 times. The stock market is worth 2 times the economy. Should that alarm you? I mean, take a look at this chart. Compare it back to where it was in the tech bubble. We're not even close, guys. We're not even close. We've reached those previous highs and just skyrocketed right through them. So, should this be a warning to you? Should you be alarmed? Well, even recently, Warren Buffett's been asked about this. I mean, Elon Musk made a comment that, hey, this thing, on Twitter, I guess, this thing is getting expensive. Look at the Buffett indicator. Kathy Wood, the famous ARK and famous growth investor, the ARK ETF fund manager, she's come out and said, listen, these are different times. The economy has changed. This is an old indicator. And even Warren Buffett himself has come out and said, listen, the most important thing is interest rates. And he would say that because as a value investor, what you do is you look at the financials of a company and you run different calculations based on, well, what's the interest, what's the free interest rate out there that you can get, what's the future growth potential, what are dividend rates, blah, 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 and therefore this company's stock should be worth this, and it's currently trading at this, or this, right? And so he would calculate and say the company's worth this, if the stock's trading at this, he would likely buy it, okay? But part of that formula is interest rates. And when we've got interest rates squeezed down to the floor, along with a promise that we're not going to increase interest rates for years, this isn't Warren Buffett going back and saying, yeah, I was wrong. He's just pointing out that, listen, stocks can actually go to the moon if interest rates are at 0 and stay at 0 forever. And value investing isn't as, well, valuable because you can't find as many deals out there when interest rates are at these low levels. So how do you apply this to your situation? To me, I would apply this not as a panic, get out of the stock market, I would see this as a warning. When you've got this tried and true indicator, not perfect, but tried and true, flashing, hey, the stock market's expensive, and you've got all sorts of financial professionals saying, yeah, it's expensive, but it's different this time. You know, we're in a new era. I would just be on, I'd have my guard up, okay? So how do you do that? Make sure that you're appropriately diversified. And I know that's old news. You know, don't have all your eggs in one basket, but right now there's a temptation to say, nah, I don't want any of those bonds. I don't want any of those international stocks. I don't want any of that value because these other areas have done so much better. Stay diversified, stay disciplined, okay? Make sure that that diversification, that investment strategy is connected to your overall financial plan, but stay diversified. But then second, as I've said so many times on this channel, make sure that you're also using a momentum strategy, that you're able to adapt, that your investment mix can adapt to changes in the overall stock market, okay? Changes in the trends, the momentum of the economy. Therefore, in a trend-based or momentum-based strategy, you don't have much international, you don't have much in bonds. Recently you've shifted a lot more to value as opposed to growth, but you're adapting with the overall changes in the economy. Therefore, you're capturing what's working today, and if it's different this time, turns out to not be different again, and everything starts shifting, you've got an investment strategy, you've got a momentum strategy that will adapt, okay? So be diversified in your investments, have a momentum strategy, and make sure all of that is connected to your overall financial plan and your long-term financial goals. That's the exact job of your certified financial planner. If you don't have a CFP, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or just give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.